What up, everybody? Happy Friday. It's 3 p.m. over here. It's August 27th, 2021. It's almost the end of the month, going into September. My birthday is in September, September 25th. So, shout out to myself. Guys, today is going to be a very important video for anyone who is trying to become a trader and needs to understand the importance of psychology and management of not only your emotions but your financial capital, because in reality these two go hand in hand. Psychology and emotional control and capital control. So what I'm actually going to bring to the table today, and it's not just a video for you or for YouTube, it's actually a video for myself and what I've accumulated, the knowledge that I've accumulated over the past few months, years, and weeks, that I've literally hit the books every single day for hours and hours and hours, on weeks on weeks on weeks, on specifically trading. Um, and I just wanted to share really what the results that I found. So shout out to a few people, a few books out there that I would recommend, although it does take time. It actually probably takes a few months if you're serious about it. But I'm going to literally summarize them, or the key ideas that I believe are extremely important for your trading. So let's start off with these two books right here. So Super Trader and Trading in the Zone. Now guys, if you are serious and committed to becoming the best trader that you can ever become, you are probably going to want to buy this book right here. This book is going to take you some serious study. Serious study, because it actually gets you to create a business plan, literally a business plan. And he says that, it might be wise for you to take 6 months off, so this is literally serious traders only. And by the way guys, there's going to be a link in the description for a Discord. It's called Mastering the Basics, and I'm going to invite anybody who is a serious trader and still watching this video to just click in the link below and actually be a part of this Discord. It's a small chat at the current time right now. I'm keeping it very specific for people that want to become super traders. And guys, I'm going to try to make it the best that I can, catering towards becoming a super trader. And now what's really interesting is another psychology book by Mark Douglas. He, in this book right here, in this book, he literally talks about super trader. And unfortunately, Mark Douglas has passed away. And so I'm asking myself a little bit, like, did Van Tharp take a few concepts out of this book because they align with each other? And here's the basic stuff that I need to get into the meat of this video. Okay. So this is going to be, I'm just going to write down a few things and I'm going to explain. Okay, so there's something called R multiples from Super Trader's book, because the way he explains it is so much simpler and well defined than Trading in the Zone. But I'm pretty sure he took the principles from Trading in the Zone. So 1 R loss, expectancy. These are things that you need to know in order to become a super trader, because the fact is, all the hedge funds, the big hedge funds, if they don't have this, which they probably do, because this guy gets paid a bunch of money to help these hedge funds out, and to make sure that they're doing the right thing. And these are extremely important. So R means risk. 1, risk loss. And then what Mark Douglas, this guy right here, says, you must define before, or he calls it predefine, before you enter a trade. Predefine your risk before entering a trade. And guys, this video is going to be pretty simple, because it's literally took me months and months and months to accumulate this knowledge, but this is pretty much all you need in order to trade safely. Expectancy is basically journaling and consistency, because every trader's job and aim is to be consistently profitable, right? Our multiple is the risk multiple that you gain on every trade, per trade. So for example, if you risk 1R, so let's actually put this one first because it is first. You want to predefine your risk first thing before you want to get into a trade. And this can be defined as either 1% of your equity or all the way up to 10% if you're that guy. And here's where mathematics is going to help you. Okay, mathematics is going to help you understand. I'm trying to make this out all neat. How much you can risk of your account safely. Like WD Gann, for example, he suggests that you use 10%, but he's a swing trader. 10% at risk on any given trade. RMM theory that we trade in the group here is using 1%. And a lot of people use the 1% rule. It's called the 1% rule of equity. Of equity at risk on any trade. So the R multiple comes in place. There you go, R multiple. Okay. Just like that. Risk multiple. I hope this is starting to make sense. But it will make more sense once I actually get into the trading and showing you everything. I mean, I'm gonna show you guys spreadsheets, right? This is next. And basically how to become a super trader from everything that I've learned. So trading in the zone, he says that you want to be cool, you know what I mean? You want to be chill when you're trading. You don't want to be trading on emotions and stuff like that. And how you do that is by predefining your risk before entering a trade. You want to literally write down and calculate on a calculator, and on your account, either use a spreadsheet like this, which I will show you guys. I might as well do it now. So I don't know if it's on this account. It's this one right here. So I literally made it all special. And then there's a few things that you want to kind of know on the journaling side of things. So first things first, CPR. I've made a 5-minute video. I explained in the last technical analysis that CPR is extremely important for your trading. Okay. So take a look at this. I think I've shared it in the Discord. If not, I will. I think it's called resources. But I will do that on my own time. Okay. And so CPR, and then there's risk management. Risk management is basically you calculate how much you have in your account. Let's say that you have $100 bucks, and then so the 1% of your position size that we were just talking about of your account, it would be $1. Say that you have like 10,000, then it would be 1% of 10,000, right? So your 1R loss, what you're risking on any given trade, is $100. And so depending on your equity, let's say it's $1,000, then 1% of $1,000 is 10. And so the 1%, and look, if we actually flip this to 10%, it becomes $100, right? $100. But here's the thing, this is what I was trying to explain in the spreadsheet, but it was a little hard in the trading view, but it was a little hard. Look, for 10% of your trade, you would have to literally lose 10 trades in a row to lose all your money. And then there's another rule that I follow inside of it, but we're not going to get into it today. It's called the rule of 3 when it comes to this, but we're not going to get into it today. So let's just say 10 trades in a row, and then you lose all your capital. So you have to be confident that on your third trade, you're going to win. That's like, so 70%, expectancy. And so let's talk about expectancy. So expectancy, what it basically comes down to is your R multiples, and we talked about the R multiple right here, right? So literally the R multiple is something that measures your gain per trade. So it's just like calculating your expectancy at the end of the day. And again, all these terms are in the super trader. So if this is like Chinese to you, I'm really trying to explain it to you in the most simple way possible. But guys, this is like took me months and months to really, and I read this book like 3 or 4 times, and then this one as well. This one is more like human nature, getting into the human nature, the psyche, and understanding how. But this is like really, really in-depth, specific, towards helping you understand how important risk calculation is and expectancy. So they both talk about basically the same thing, but different wordings. So this guy, he has more words, and then he has more strategy. He has more words, more explanation, and there's also an audio for free, probably on both of these books. And so yeah, is there anything else that is extremely important for your trading? Journaling, right? Spreadsheets. Okay, so let's talk about the spreadsheet right here. So what is expectancy? R multiples and expectancy. So at the end of 30 trades, what Van Tharp and many statistical people, actually what Mark Douglas says, he only needs 20 trades in order to know your statistics, right? But I say 30. And then at the end of 30 trades, you literally have the expectancy. And it's all calculated here. As you can see, we have a little formula. So whenever you do enter all of these calculations here, and we're going to get into it today. So the date, of course, the trade number, the entry risk. So the entry risk is what we were just talking about. It should be 1% of your account or 10%, whatever you're comfortable with. And this is the most important thing. 1%, people are really comfortable with losing 1% of their account, or 1R, right? And so they'll go ahead and use it, okay, and use it at the best of their ability without actually caring, because this one here will take you 100 trades to lose basically your whole capital. So the point that we're trying to do in our multiples and terms is understand that what a 1-to-1 is, what a 1-to-1 is. So you risk 1R, you gain 1R. And then at the end of the day, you want to actually become, you risk 1R and you're gaining 5R, guys. You're gaining 5R. You risk 1R because that's where your expectancy shoots up right through the roof, right? So it depends like how many times you can trade this. You can probably do this many times a day. Maybe have an expectancy of 70% and then become a pretty good prop. But you have to be literally in front of the screen, right, all day long. When it comes to this one right here, they come probably a little bit less often, unless you're really hunting for them. But your expectancy goes through the roof. And then finally, like at the best of your ability, you want to actually go for large R multiples. And I'm going to show you how to do that when it actually comes time to trading, because it's all about having a plan and implementing your plan. Literally understanding your plan and implementing it, because we understand that break-even stop losses are really, really good strategy and a good discipline to get into. A break-even stop, right? Whenever the market goes in your direction, you put a break-even stop. Okay, so that's how I would do it there, and that's how I'm going to do it here. So here's the R multiples. This is where you actually have to literally get into the habit of writing down this. And what's going to help you do this is either watching someone else that knows how to do it and rewiring your brain that way, or literally imagining yourself do it, because that's the only way that you can actually rewire your brain and do it for yourself. So you have to download the narrow pathways, what is called, this is more like psychology talk, but they're called neural pathways, and basically they're habit loops, and you just got to do it, and then it becomes subconscious, just like whatever you do when you get up in the morning, you know, either make a coffee, you brush your teeth. This is subconscious, and this has to be subconscious because you got to do it without thinking. So next is another part of the journal that I actually added. This is not part of Super Trader Trading in the Zone, but it's part of someone else that I found. He actually had a pretty good idea that he basically he writes the reasons for entry on the chart, and then the image. So the actual RR, and then the exit image, and then the win-loss. So I thought that was a pretty cool idea because you can just post the link. You can also post the picture, but the link is easier because you can just click the link after, and then we can. This is how I'm going to basically what's it called? Spreadsheets review. You know, and trying to improve. I hope you guys like this video so far. Comment if you have any questions whatsoever, because this is what is going to be the meat of this this channel, guys. This channel is going to be catered towards trading. Yes, we're going to do technical analysis and stuff like that too, but really it's at the end of the day, it's like studying these books right here that are literally going to help you, because it's not like all about technical analysis. It's about this sheet right here, basically. This expectancy is extremely important, and so after you have done 30 trades, we have an expectancy, and I'm so excited to wait for my strategy. There's a few strategies that I'm using right now that are just amazing, that are working in the market right now. I'm not currently trading right now because I'm accumulating all of the knowledge, and I need to make it extremely specific for myself, and I might as well share it with YouTube, right? And so here's the expectancy spreadsheets. It continues to go, and then we basically have about 200 trades, right? 210 trades, and that should be pretty easy to do. And then at the end of it, we're gonna have expectancy for every single strategy, and because I want to figure out for myself what's the best strategy for me. Which one do I like the most? Which one do I like the most? And which one is more fruitful and profitable? And I know that different market conditions, and that's why I have the Discord open right here for the VPA. There's different market conditions, like a bull stage analysis and the bear stage, where there's basically an uptrend, a distribution, and a downtrend. And then, so basically, this is our Discord that we've created, and there's also like hangman psychology patterns, because the whole basis of this channel is really to understand the basics, to master the basics. And one of the basics is to master psychology and human nature of the market. Okay, and guys, I'll do like a quick little technical analysis after this. But yeah, I hope this was pretty good explanation. In order to start trading, you have to predefine what is 1 hour loss. You have to probably use a spreadsheet to actually help you figure out your risk management. So 1 hour loss for me would be 1% of an account. Depending on your account equity, it could be all the way up to a milli or more, right? Trading crypto. And then your 1 hour loss is what you're going to actually risk on any trade. And so the reason this gives you confidence, and it helps you manage your emotions, because you know how many trades that you need to take. For example, if you're risking 5% of your account, this could be a decent number, but they really do say like 1% is gonna keep you really cool, because 5% only gives you 20 trades, right? Before your account goes to nothing. And so you need to maybe start off with 1 or whatever it is. I'm going to start off with 1 just to get comfortable and get myself back into the market, which actually gives me 100 trades. And I'm going to probably increase this because Gan says 10%, but he's a swing trader. And so, yeah. So next is the R multiples, risk multiples that you measure gains. I hope I made it clear for this. It's basically just the multiples that you actually gain. It's the RR, but is measured specifically towards the dollars. Well, the whole point that we're doing here is 1R, is that we're not putting dollars on it, and that's why it helps your psychology. Like, oh, how much did you lose on that trade? 1R. You know, it doesn't matter if you're trading billions, millions, whatever you're trading is 1R. So it's like more of a disciplined approach to trading. How much did you make on that trade? 5 R's. Did you understand? So I risked 1 R, but I made 5. So my risk was 1 R, I made 5. So 5 times 1 R. So say that your 1 R is $10, you made $50. If you actually want to go to the nitty-gritties of the dollar terms, but you made 5 R's in the trade, right? So the 5-to-1 risk reward. And so that's basically all I kind of wanted to do for this video. But guys, I am going to make some live trading, and then I'm going to review and all this stuff. I'm going to do my best to continue with the videos, because I know it not only helps you, but it helps myself as well. And like I said again, if you want to join the Discord and be a serious trader, step up and definitely join, sign up, and start chatting, you know, asking questions and great comments and stuff like that. And that's how this channel is gonna get better and better, and it's by your questions and so and your conversations. Okay, so last but not least, we have expectancy. Expectancy is what you can expect after 30 trades. After 30 trades of your trading and your recording and everything like that, we actually have something called an expectancy. And so let's talk about the date, the trade number, the entry risk, which we already talked about, right? 1% of your account, 1 R. And it actually is, because I wrote this down here, is the difference between the entry price, and that's where we're going to talk about CPR. It's actually the first one right here, and it's going to tell you just it's basically 1 R though. Okay, it defines what's your 1 R, the contract size, the gains and loss, and then the R multiple. This is going to be the more important one, is basically row E divided by row C. So your gain or your loss divided by C, your entry risk, your 1 R. And so this is either going to give you a 1 R multiple of the $10 that, for example, on 1,000, or was it, yeah, on 1,000, or like a 5 R gain, right? So that's why we used 1 R, and that's why we use R, because it doesn't actually it's not about the dollar terms. It's about staying disciplined to your risk, like your risk, right? So it doesn't matter if you're talking millions, billions, or for like thousands, whatever. It's about staying true to your trading discipline. And so of course at the end of 30 trades, you're going to get something called an average or a mean, what we call expectancy. And expectancy is going to be the extremely important number on your strategy. I personally, because I personally want to figure out like 30 trades on this strategy, 30 trades on this strategy, you know what I mean? Keep them really specific. So I'm going to actually capture the images, and we're going to basically track this as well. So this is just another spreadsheet. You guys can either use either one, but I think I'm going to get rid of this one and focus on the 1, 2, 3, 4. Okay, and this is the CPR. This is going to be like before getting in a trade, how you measure it and how do you calculate it. So of course the CPR for traders video is 5-minute long. It's on my thing. It's really good actually, in my opinion. But I'll probably make another one. And so yeah, take a look at the CPR video. It's probably better than what I can do right now, because yeah. So let's cover the technical analysis that I said that I was going to do. This is the same chart that I looked at like a couple weeks ago, guys. And so this was the wave, that the exact wave that I didn't touch anything. Okay, so I'm pretty sure I wrote it down right here. And so what happened is that we did get the 5th wave, and I thought it was going to stop right here on this date. What the market did is actually came down, pulled back inside of a trend line, and then topped right here. So with price, it literally topped right there. And I honestly don't remember how I picked this price, but I did. I don't know if it was lucky or if it was from an actual thing. So that's why pictures are extremely important, and documenting like that stuff. And so we have one moving average on the chart, trying to keep it simple. I think it's the 30 or it's the 10. So I use the 10 and the 30. You can obviously see that we're getting a nice bounce on this EMA. But yeah, so I would move this there, but I'm not going to do it right now. Like just like that, because this is going to be a resistance. That's the breakout point as well. And this is where it tops in time. And so, but yeah. So that's all I wanted to say for this video. This is basically my Elliott count. I would basically redo it like this though. Something like that. I'm not sure if this 1, 2, 3, 4, 5, right? Some people are counting like that. But if we count it like this, 1, by the way, this would be the 1, 2, 3, 4. Yeah, that doesn't work unless you want to go like that, maybe. This would be the 4. But yeah, I haven't actually looked at the internals or anything like that. So, and at the end of the day, it's like, I'm going to bring to you guys a different type of Elliott wave that nobody has ever seen. And it's going to be pretty good because that's one of the ways W.D. Gann uses. He didn't use Elliott waves, he used waves though. But he called them sections. That we're gonna talk about that later in the future. So I hope you guys like and definitely subscribe to this channel because more content like this is gonna happen. If you guys go ahead and get those books or have any questions, let me know in the description because they're helpful, but you do have to put the time and work into it. Okay, so peace.